Trump promises to raise tariffs on China, but what will that mean for the Asia-Pacific? Welcome to Market Insight. I'm Elena Casas. US President-elect Donald Trump has promised to slap tariffs of 60% on Chinese exports and of 10 to 20% on a number of other countries. That prospect has made investors jittery about companies exposed to China in particular as they prepare for a potentially escalating trade war. Well, to take a look at what that could mean for the region, I'm joined now by Schoenfeld, CEO of Market Vector Indexes. Stephen, hello. Donald Trump, of course, did put high tariffs on Chinese goods in his previous administration from 2018, and many of them were continued under the current administration. But is this promised policy a step change?
Well, the rhetoric certainly is pointing to a renewal of higher tariffs. There's still some jockeying around who's going to be the top economic policymakers. And one of the litmus tests for a new Treasury Secretary and trade representative is support of increased tariffs. The administration placed very high tariffs on China, and then toward the end of the administration, they made a deal to slightly lower the tariffs. Those are the ones that have stayed in place. And China was going to import more from the US. China did not meet that side of the bargain fully, and the incoming administration is well aware of that. So I do think their first step will be to impose tariffs. Whether it's 40, 50, or 60% is yet to be seen.
The Chinese economy, Stephen, is much weaker than it was in 2018. How will that change the impact?
I think the Chinese will have to move with caution. Their economy domestically is quite weak and faces a number of very significant structural challenges. And one way they've grappled with this is by increasing exports, mostly not to the US, but around the world. And if they're hit by tariffs, that will hurt their exportability. And so they will have to tread carefully. The new tariffs that the US might impose will also look at secondary countries. So, for example, we'll look at Chinese manufacturing in Mexico that may then be moving into the US. And so those kind of workarounds, whether it's through Mexico or even through Vietnam, will be under scrutiny by the new administration.
Interesting that you mentioned Vietnam. Several neighbouring economies in Southeast Asia did benefit from the previous round of tariffs in the sense that companies moved production there from China. Could we see that happen again?
Well, we will see some impact and recognition. So Vietnam is now running a very significant trade surplus with the US. It's possible, even though they are becoming closer to the US, that they will have tariffs imposed on them, and some of it could dramatically hit their export economy. So it's a smaller country. It could have significant impact in Vietnam. And there'll be other impacts around the region, both economic and geopolitical.
What does this mean for investors then? How nervous should they be in approaching companies exposed to China?
So we've already seen, even since the election, significant outperformance of US companies, particularly US domestic-focused companies, to the rest of the world, whether Europe or Asia. I think it's very important that investors target globally focused companies that are able to rebalance their production. We also see a major theme. We wish it wasn't because of geopolitical tensions, but we see major allocations to defense companies around the world. One of the things we feel quite certain about is that defense spending is going to continue to increase by Japan and Korea and Australia in the region, in Europe, and around the world, and we see defense companies benefiting from that.
As you mentioned, the security environment is increasingly more tense in the Asia-Pacific, notably with an explicit desire from Beijing to unify with Taiwan by 2027. Should that make investors nervous?
Absolutely. Taiwan, aside from being a bastion of Western democracy in Asia, is also the world's largest manufacturer of semiconductors. The US has incentivized production in the US, and in fact, Taiwan Semiconductor is opening a massive plant in the US, but it will impact the region. One of the key focuses for the region, and especially the US, will be to increase deterrence against China between now and 2027. President Xi just met with President Biden and again emphasized the one China policy, and the new administration is going to have to navigate that. And smaller countries such as Singapore, Malaysia, Indonesia will all have to balance China's assertiveness in the South China Sea and vis-a-vis Taiwan with their own defense needs.
Stephen Schoenfeld of Market Vector Indexes, many thanks for your thoughts. And that's your Market Insight. Don't forget, you can watch more videos on Reuters.com.